Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. A lot of the talk in 2022 has been about exchange-traded funds. It seems that they've become a lot more understood, more widely available, and in turn, more popular with investors. I wanted to wrap up what we've seen this year in the ETF space and also what we can expect in 2023. Remember, this is general information only, and you should speak to a professional advisor before making investment decisions. Jon Maier is the Chief Investment Officer at ETF provider Global X and joins me this morning from New York. Good morning, Jon.
Good morning. Thanks for having me.
Now, Global X ETFs was founded in 2008. You've been operating in the space for a long time. Can you just give us a very potted history of how they have progressed, particularly what's happened over the last year or so? Because we just talk a lot more about ETFs than ever before.
Sure. Let me just take a step back. I've been involved in the ETF industry since it began, essentially. When I was at Paine-Webber, which was purchased by UBS, then Merrill Lynch, and now at Global X. And the ETF market, my first report that I pulled up fairly recently, it was about $50 billion in assets in 1999. I don't know if I had the exact number right, but now it's $7 trillion in the US, $9 trillion globally. So the ETF market has grown tremendously over time.
Okay. What about in the last couple of years and even in 2022? Is that growth rate kind of consistent or has it accelerated in the more recent years?
The ETF market is still growing meaningfully. I don't have the exact number on me. Certain markets are growing faster than others. Certain markets are less mature than others. Obviously, the US market is a lot more mature than some other markets out there. Even this year, when the overall market, whether it be the NASDAQ or the S&P 500 or other global markets, indexes, haven't done particularly well this year, there has been positive inflows into ETFs. So it's still a market that investors want to be a part of. And it's just a great way to access the overall market, just because the structure is so great.
Okay, so let's go into that. And for the uninitiated, maybe just give us a very thumbnail on how ETFs work and the attraction of ETFs, particularly in volatile times like we've seen this year.
Well, ETFs are security. They're a wrapper. They trade on an exchange. They trade throughout the day, unlike a mutual fund, where a mutual fund you can buy at the end of the day. Although these securities inside can be traded, depending if they're actively managed or track an index. But these can be bought and sold throughout the day. And they're just a structure that hold securities within that structure. And they're very accessible. And the structure replicates any index. And it's just easily understood. They're tax efficient, meaning that typically they don't have, and this is very relevant in the US, typically don't have capital gains because shares are created and redeemed. And there are also some underlying trading that goes on within the portfolio. So oftentimes what happens with a mutual fund, say you bought a mutual fund in October and the market did rather well from January to October, but you just bought that mutual fund, you're on the line for that capital gain when it distributes. Yep. So that's a big deal, big difference.
Okay, so let's bring it into Australia. Where is the Australian market? I mean, I think it's worth $132 billion. In terms of its maturity, where is it? Obviously a long, long way behind the US, but I think everyone's behind the US in this. Where's Australia up to?
So my understanding about Australia, it's, as you mentioned, about $130+ billion in assets, and it's growing at a very strong pace, 35% annualized growth. The adoption is increasing. The number of people in Australia that own ETFs is 1.9 million people. Last year was 1.7. And a further 230,000 Australians are expected to invest in ETFs for the first time in 2023. If you compare it to some other markets, like in Canada, the size is about 255 billion. Europe, in aggregate, is $1.5 trillion. So it's a newer market, but certainly has tremendous amount of growth.
Stay with me, Jon. We'll be back in a minute. My guest today is Jon Maier, Chief Investment Officer at Global X. Okay, so Global X has launched some ETFs in Australia relatively recently. Can we run through a few of those and just sort of how you see them playing out and I mean what they are and how you see them playing out? So green metal miners that's GMTL on the ASX here, green metal miners.
Well, green metal miners it's important. Certain metals are important for renewables, whether it be lithium or copper, or as we move to clean tech, these renewable energy sources are going to be ever more important. There's the economic environmental realities of climate change, and that has spurred a tremendous amount of spending, both public and private in the US as well as globally, investments in clean tech and these other technologies, decarbonization. So these metals are really necessary for these new technologies. So that was one of the reasons that we came out with the ETF, because there's going to be continued adoption. So we want investors to have the easy access point to these companies in that space.
And I mean, in a sense, you're spreading your risk somewhat. You're not just going for a pure lithium play or a pure nickel play. You're kind of spreading across the green metals.
Well, that's the great thing about an ETF is that you have diversified exposure within that structure. The structure is the ETF. It holds a number of companies, miners in this case, and then you're further diversified across, in this particular ETF, across different types of miners.
Yeah, a slightly different one is copper miners, which is the ASX code WIRE, WIRE, the copper miners ETF. Presumably that's much more on copper, which of course is kind of one of the most fundamental commodities for the way we live.
Well, yeah, copper is important. And I also think as China reopens, and I think you'll see an opening of China probably in the second half of the year. And because of that and the industrial production out of the reopening, I do believe that copper is kind of the right time right now. You are seeing an increased interest in that commodity, and it's done rather well, pulled back some, but now there's a lot of interest going forward.
And just one final one local ETF here, which I've got to mention because I love the ASX code, which is ATOM, ATOM. It's a uranium ETF, very controversial commodity in Australia, uranium. But tell me about that one. Why an ETF on uranium?
Well, that's in the US, our uranium ETF is one of our largest ETFs. Now, uranium is needed for nuclear power plants. Nuclear power is actually considered green energy.
Yep.
I know there's been some accidents globally, but you take that out, there's virtually no emissions. And you consider what's going on in Europe with the reliance on fossil fuels from Russia. The war in Ukraine kind of highlighted the need for alternative sources of power. You saw that Germany was planning on decommissioning three of their last nuclear power plants. They put that on hold because they had to, because of energy needs during the Russian war on Ukraine.
And I think, Japan recently came out, and if they want to reach their goals, their carbon emission goals, Japan, for example, has to go back to nuclear energy. It's kind of, there's no alternative at the moment.
None at the moment, but as I mentioned earlier, the green metal miners, that ETF, serves the clean tech space, and there has to be more in that area over time, and there will be.
What about ETFs from Global X in emerging markets? Just explain what the ETFs are doing and the I suppose the attraction of investing in emerging markets in an ETF as opposed to another way.
Well, there's different ways to access different markets. There's actively managed exposures, and you can actually have actively managed exposures inside an ETF. In the US, we have an emerging market debt ETF in the US, which is actually actively managed. So it doesn't necessarily have to be purely passively managed, but in any structure, the diversification is really what you're looking for. And in an emerging market ETF, you may get that, or you may get kind of specific exposure to an emerging market. For example, in the US, we have a whole suite of China sector ETFs.
Yeah, right.
And obviously China is considered an emerging market, although is one of the largest economies. But, within a sector, you'd get exposure, or you get broad exposure within China, or you'd have just a general emerging market ETF for whether it be China, Brazil, other emerging Asia countries. So it's just a diversification component like in any other structure that's investing in a wide variety of, wide geographical area.
Okay, Jon Maier, tell me 2023 for ETFs. They'll keep growing. How do you think they'll perform?
No doubt. I mean, if they will continue growing. They grow through up markets and down markets. These ETFs are just a structure this innovative structure that wraps around many different things. So you're not investing in an ETF. You're investing in a local market, a broad market, a certain commodity. So it's just an easy way to access a lot.
Jon, thank you for talking to Fear and Greed.
Thank you.
That was Jon Maier, Chief Investment Officer at Global X. This is the Fear and Greed Daily Interview. Remember, this is general information only and doesn't take into account your personal circumstances. You should get professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.